go up and sweep this previous structural liquidity and then continue to the downside, something like this. So obviously if I want to trade some zones, I will have to mark some zones, right? On the 30-minute, this was the supply zone right here. This is the same leg. I'm repeating myself again. This is the same leg from the hourly, but if the hourly is making a impulsive move like this, right, maybe in the 30 and 15 there must be a supply zone here. On the hourly, this is the supply zone, right? But in the 30-minute there might be a supply zone here, supply zone here. So we have to adapt to the markets, right? So according to that, I was anticipating for a move from this fair value gap, because this was the closest fair value gap in the M15. You can argue there was a fair value gap here, but that was already filled. So now at this point, okay, so at this point I was looking for this liquidity to get swept. This liquidity got swept to the T. After sweeping this liquidity, previous structural liquidity, Asian high liquidity, and mainly the higher time frame bias was bearish. It was so clean for me that it's gonna continue to the upside. And now at this point I go to the DXY, because DXY helps us a lot for our bias selection. Clearly we can see the Asian low was swept, which was one more confluence. The Asian low was swept on the DXY, and then a huge bullish candles were appearing. Huge bullish candles were appearing on DXY. I took the trade on basis of DXY on DXY, and also on Euro USD the Asian low was swept. So now it made sense to go up from here, like to continue down. And also SMT happened here, right? If you were trading Euro USD, the Asian high didn't got swept, right? Whereas on GU the Asian high got swept. So you could have also traded Euro USD there, anticipating that GU has already swept the Asian high, so EU doesn't need to go and sweep the Asian low. And also there was what you say, SMT right here. You can clearly see there is a 4-hour fair value gap here, right? 4-hour fair value gap, 4-hour fair value gap. The EU went up and swept all of the liquidity on this 4-hour fair value gaps, whereas GU, clearly on GU you can see these fair value gaps are not filled. SMT is not a bullshit concept. It works in the markets. As we can see, there was fair value gap here, did not get filled, whereas on EU it got filled. So what we can do in that case is EU got filled, right? So the EU can continue to the downside, whereas GU can continue with EU, because they are internally correlated. And obviously whenever we are seeing SMT, we want to see it with the bias. So our bias was also bearish, so it made sense for GU to continue to the downside, and without doing this, and that confirmation was given by EU. So it was a very, very high probability trade. It was a very high probability trade. I entered the market after seeing all of my confirmation, DXY confirmation, all of this confirmation, Asian high liquidity sweep, previous structural liquidity sweep. There was no order block mitigation. This was a liquidity sweep, DXY correlation trade. Beautiful, played out to the T. Let me show you how. So yeah, market came up and scared all the early sellers. Most of the people have taken a loss here, right? And some guys have obviously put a tight stop loss here. They got stopped out, and the rest was history. As you can see, it was a very, very good trade. Oh, and also there was Wednesday, there was NFP news, and we know that what NFP does, or any news, high impact news does, is London makes the move, New York goes opposite to London and takes all of the sellers or buyers that have sold or bought on London session. Clearly we have sold on London session, right? So when news came in, boom, went up, swept our liquidity, and then literally had the move to the downside. So this is exactly what happens in the market. Market goes from one liquidity point to another liquidity point, so we have to be very careful in that case. Whenever there is high impact news, don't hold the trades. If you're holding the trades, break even the trade, or at least take partials. As we can see, on Wednesday there was ADP, non-farm employment change, and also lots of USD news throughout the day. So it's clear, right? The market went down on London session, whereas on New York came back, swept all of the liquidity from all of the sellers right here, right around here. Perfection. This is perfection, bro. You can see, swept all of the liquidity, and after manipulating the market, the big banks made the move again. It was a 1:7 trade, beautiful trade to the downside. If you were not greedy and you took the profits on the previous day low, it would have been a very good trade by taking partials. So yeah, this trade would have passed us any Profirm challenge that exists in this world. So this strategy is very profitable. Just you have to wait for the perfect setup and don't chase the market. That's all.